You might be watching this because you found yourself in a situation where, for one reason or another, you've come to the regretful conclusion that you need to sell your business very quickly. In an ideal world, you'd be looking at a 3 or 5 year exit plan, but the reality is that very few business owners consider their exit that far in advance. Even just recently, I've spoken to a business owner, more than one actually, who said they'd like to complete a sale within a few months, and one said they'd be willing to leave their business within a few weeks if they found a buyer. Now, I'm not going to tell you that you can't sell a business within a few months or a few weeks, because you can. But when you think about all of the reasons why businesses don't sell, and that's actually the majority of businesses that go on the market, they don't sell, every reason points back to one thing. And that's business owners not having a grasp on how selling a business works. The stuff I've spoken about, like misleading valuations, and almost all are misleading, keeping your sale confidential, not treating the business as a product when selling it, can all be mitigated just by learning what's involved in the sale process. So if you need to take action now, the first thing I would suggest is getting some valuations with brokers booked in. Get some phone calls booked in the diary over the next week or so. And while that's happening, there are a few things you can do to make sure that you firstly actually achieve a sale and secondly complete it as quickly as you can. My name's Jon Gleeson and I help SME owners sell their businesses. So how do you sell a business very quickly? Well, there's good news and there's bad news. The bad news is that whether you have 3 years or 3 weeks to prepare for market, selling your business is going to bring you challenges that you've never experienced before, and it will drain your energy when you've already got a business to run and circumstances in your life that you need to deal with. There's no getting away from that, and if anyone tries to convince you that selling your business will be easy, then you should consider running a mile in the opposite direction. The good news is that you have a choice, and it's a choice between the prolonged pain of having your business sitting on the market for months or maybe years, and on the other side, the hard work and energy involved in finding a buyer and getting the deal over the line. You can choose your pain. So what are the things that you can do in a week or so to be certain that you're making the right choice? I'll come back to your valuation appointments in a bit, but once you've booked them in, you need to get in touch with some other business owners. Your accountant is likely to have clients whose businesses have either sold or are currently at some stage in the sale process. And if you have a mutual contact in your accountant's firm, then they're more likely to agree to help you than approaching someone you don't know. You can also go online, find a business that's for sale and email the owner. Now, if you want them to talk to you, then I would suggest choosing someone who is marketing their business openly and you can easily see their business name and location in their online ad. Even if you recognise the business but those things aren't visible, then they may not have told their staff and that could put their backs up. But tell them that you're thinking of selling and ask if they'd be willing to have a 5-minute chat. If you can make contact with a seller, the key question to ask is, what do they wish they had known before they went on the market? That's because one of the reasons people get so frustrated when trying to sell is that nobody's prepared them for what the sale process will involve. Because if you don't understand what the sale process involves, then you're going to find it easier to fall into the trap of handing the whole project over to a broker thinking that all brokers do the same thing. It's just that some are cheaper than others. Well, once you begin to familiarise yourself with how selling a business works, you'll be able to fully understand what you need from a broker and if they're going to be able to help you with the biggest transaction your business has ever made, which is selling it. These conversations with people who have already sold or are in the process of selling are going to open your eyes to just how much work is involved in selling a business. So let's say you've got some brokers lined up to give valuations and you're making contact with other owners. It's time to get a handle on the financial performance of the business. Now, I've talked before about how the typical broker doesn't prepare their clients for the sale process. And what they'll do is they'll sign you up and use whatever financial information you've got available to reach a valuation. And when the time comes, they'll present this to buyers. But the fact is that the value proposition to a buyer needs to reflect the current performance of the business. If your year end was a few months ago and you've only got finalised accounts up to the previous year, the financial picture is completely out of date and you're not going to be able to reach a realistic asking price or formulate a marketing strategy unless you know what the up-to-date numbers are. Remember, your business is a product. You need to package it, price it, market it effectively, and if you're working with old numbers, you're setting yourself up to fail. So if you need to sell your business quickly, get those numbers up to date. Talk to your accountant about having your most recent accounts finalised as soon as possible. And you don't have to take my word for this. The other sellers you're talking to will tell you that the first thing buyers will be looking for is up-to-date accounts, because without them, a buyer isn't going to be able to connect the asking price with the benefits of owning the business. You're unlikely to get any viewings, let alone offers, unless you've got up-to-date accounts and monthly management accounts to show people. So now it's time to talk to brokers about the valuation. They'll often begin with a phone call, maybe a visit, but it's important to remember that in return for your free valuation, you're giving them the opportunity to sign you up for their services, and that's their primary reason for speaking to you. I would suggest talking to at least 3 brokers, but as many as you can. So why would I, as a broker myself, say that you should talk to other brokers? Well, the answer is because at this stage, while a valuation is useful, it's not actually a monetary figure that you're looking for. It's a relationship. What relationship are you going to have with them throughout the entire sale process? How hard are they going to work and make you work to get this sale? Remember what I said about this taking up a lot of your energy? Well, the harder a broker works for you, the harder you will also have to work. Now that might seem like a strange thing to hear if you've appointed someone to handle the sale. But if you speak to someone who sold their business, they'll tell you how much effort they've had to put in to make it happen. And if you speak to someone whose business has been sitting on the market with no interest, they'll tell you how little effort they've had to put in because their broker isn't working hard for them. Choose your pain, because the less work that you have to do, the further away you'll be from selling. You need to sell your business as quickly as possible. Choose the wrong broker and you'll find yourself sitting on the market wondering why your business isn't generating any interest. And it doesn't matter what size your business is or what time frame you need to sell in, if the sale isn't handled properly, you're unlikely to find a buyer. Remember, most businesses that go on the market do not sell. And if your broker is only going to advertise your business for sale online, then it's even more important that you consider the relationship over the valuation figure. Because if the brokers you're choosing between all advertise in the same online spaces, the only point of difference is in the level of service you'll receive. So when the broker's telling you that your business is worth 3 times your profit or whatever nonsense they come up with, and are telling you that there are loads of buyers looking for a business just like yours, ask yourself if this is the person that you would trust to handle the most lucrative project your business has ever been involved in. Because that's what we're talking about here. You only sell your business once. Choose the right broker so that you can be certain they're doing everything necessary to find you a buyer and close a deal. And make sure it's someone who'll work alongside you from start to finish, because even in the smoothest of sales, there will be choppy waters. Once you've made the decision, you really need to open up to them. Whatever reasons you have for needing a quick sale, do be honest with your broker. I know it can be difficult, particularly if you've got personal issues which are forcing you to sell, but you'll only ever get to the completion stage if you approach it with an open and transparent mindset. The same goes for any issues in the business which you might be concerned about. You might be happy with your asking price, you might have a great marketing campaign which generates buyer inquiries, but believe me, any skeletons hiding in the business are going to be brought to light through the negotiation stage and certainly in the completion stage. So to save yourself a heap of time, you need to put these things on the table from the start. That's another reason why it's so important to make the right choice when it comes to your broker, because your broker will be able to determine if buyers will be prepared to take the business on and tackle the issues themselves. And whatever the issues in the business are, if you can demonstrate to a buyer that you are making progress towards resolving them and your broker can communicate that, then you're less likely to lose buyers who get nervous when these things emerge further down the line. You want to get the best price for your business, but you have to sell. You've made the decision or it's been forced upon you and you need to do it as quickly as possible. So this is where you need to consider what your lowest price would be if you could sell on the terms that give you the exit you're looking for. There's a market for any business, any service, any product, if buyers can align with the value proposition. And in a situation where you're short of time, you have the ability to amplify the value proposition for a buyer by pitching the sale at a more attractive price. Look at it from a buyer's perspective. They've got access to funds, but there's competition for that money. They could invest it in the stock market, they could buy investment property or start a new business just like yours. But if you can communicate that buying your business gives them lower risk and potentially higher returns, then you'll attract buyers. And one of the biggest elements of the marketing is your asking price. I've discussed previously how sellers are often tempted to add a premium to their asking price and then wonder why they can't find a buyer. Now, loading your price because you can is fine if you have the ability to review it after a few months and adjust your marketing. But when you need to sell quickly, you want to have the best chance of finding a buyer as soon as you can. So think about the money you need from the sale and balance that with your objective of selling your business as soon as possible. If you found anything in this video useful so far, please hit the subscribe button so that I can keep doing this, and leave a comment if there's anything you feel I need to clarify, or click the WhatsApp link in the description below to get in touch. If you rent a premises for your business, it's really important that you talk to your landlord as soon as you know you need to make a quick sale. Landlords, by and large, need their properties occupied with rent-paying tenants. If there's a danger that you'll close your business, that would mean that they would have to find a new tenant, which will cost them time and money. If you're able to sell the business and assign the lease to a new owner, you'll be saving your landlord all of that work, and actually when that happens, it's likely that you will be paying the landlord's legal fees. So make sure that they're aware of what's happening and check the terms of your lease. Quite early on in discussions with buyers, they'll want to find out about rent reviews and the lease's security. Most leases are protected in that when the lease term ends, you have the right to a new lease. But it's important you know that early on, so dig out your lease agreement and keep it handy. There are a couple more things which deserve a mention here, and they can save you masses of time in the sale process. The first one is the type of sale you're going to conduct, and what I mean by that is, do you sell your limited company or do you sell the assets, goodwill, fixtures and fittings, etc.? Any buyer will want to conduct due diligence research before completion, and that's likely to take quite a bit longer if they're buying the limited company. So if you sell your assets, trading name, fixtures and fittings, the new owner has no responsibility for bank loans, overdrafts, any liabilities within the limited company. You hang on to it and you remain a director after the sale. You've just sold the trading entity. If your limited company name is the same as your trading name, then a buyer will just ask you to change the name of the limited company for peace of mind. This costs you a few quid on the Companies House website. But do speak to your accountant about this and find out which method of sale is going to be more tax efficient and by how much. Because some buyers may only be interested in a limited company sale and there will be others who don't mind which. But it's worth having an early conversation with your accountant about that. Now, the final thing I want to mention is that during the marketing stage and into the negotiation stage, you'll find that some buyers have cash and some need to raise finance. You will complete quicker with a cash buyer. So if you've marketed the business effectively and generated interest from buyers, and you've got into a position where you've got a couple of offers, be very mindful that a cash buyer won't have to apply to lenders or conduct extensive market research or write a business plan just to raise the money. A cash buyer may want to do that anyway, but trying to get finance for an acquisition is time consuming. So weigh up the financial position of the buyers and balance it with your own requirements when it comes to selling.